Welcome to this episode of our property investing channel, where we bring you practical tips and strategies to help you maximize your profit and reduce your risk in your property investing journey. This is your host, Amir Sehat, and today we're going to be talking about challenges that the property investors normally experience when expanding their portfolio. Our guest today is Vee R-Byrne, the Director of Global Commercial Advisory and Lifestyle Vee Finance, with vast experience and knowledge as a finance strategist. So without further ado, I'd like to welcome Vee to our show. Vee, thank you very much for being here today.
You're most welcome, and thanks for having me, Amir. Thank you.
I appreciate it. So could you please share with us your journey and experience in the field before we go deep?
Sure. So I've been in the banking and finance industry for nearly 2 decades. So I did work for the majors, and also probably I've covered the lending space. So business, residential, commercial, and also wealth management.
Well done. So
Yes.
we're going to talk about creating a property portfolio. And one aspect of achieving this goal is setting short-term and long-term goals. So
Okay.
how crucial, in your opinion, is it for investors to establish both short-term and long-term goals?
I think that's a very, very good question because, even in finance and banking, we always talk about short-term goals and long-term goals, right? Because these two are very, very, it's related, interlinked. So if you understand what are your short-term goals and you have your foundation right, then it will help you overcome the challenges for your long-term goals, right? So short-term goals, for example, I'll just give an example so that people can understand what's a short-term goal. If we have clients coming to us, we want to know, okay, what are your plans in the coming 6 months? Some of them may be looking for a property, their first home. Some of them may be planning to purchase a property, okay, or maybe some of them maybe just got, they're fully employed and they want to know, okay, what are the avenues, so that they can get into the property sphere. So we work with them to understand their finance, to understand their income, so that we can have a solid base. Because if we understand what they want to do in the 6 months, then we also help them to discover or uncover what they can do down the track in 2 years' time.
Sure.
Yes. So if there is a plan, so it's always about planning. It's always about planning and budgeting. These are
Sure.
two keywords that I would state. Because if you have your base right, then you'll understand, okay, in 6 months I want to achieve this, or in 1 year I want to reach here, and in 2 years where I want to be, and what do I need? What is the planning that I require to reach, what I want to achieve in 2 years' time?
Sure. So it's very interesting concept. Some people prefer to basically set short-term goals and then long-term goals.
Yes.
I personally prefer to set long-term goals and then convert it to short-term goals, because let me give you an example. If my goal is to create a portfolio,
Yes.
and I set my short-term goal to buy a personal home, these two goals might not be completely aligned with each other. So if my long-term goal is to create an investment portfolio that has 10 property in it, probably
Yes.
I divide it into 10 years and then said each year I need to purchase something. And then I go deeper and divide it into a shorter period, like 6 months. But that first step, which is, for instance, for many people, is purchasing their first home, could basically stop them from achieving that long-term goal. Because if they purchase a property that is in a bad location, or they overcapitalize on the first purchase, it is a very poor foundation for their long-term goals. So how do you see it from the finance point of view?
From the finance perspective, like you said, if they overcapitalize, or if or if they don't have the right base, then it becomes difficult for them to achieve what they want, because people have to realize when it is very easy to buy your first property, it's very easy to buy the second property, right? But your
Yeah,
income doesn't expand. It doesn't expand exponentially, so that you know that, okay, I will have X amount of income so that I will service, so that I can buy 3, 4, and the fifth property. So this is where we work with structure and we work with strategy. So this is
exactly.
really important. This is key, because it's easy to buy the first one, the second one, and so forth. And then you have to think, if a couple is going to purchase their first home, now we can foresee things because we've been in the industry for 20 years to anticipate things which they may not anticipate, right? So that's why we educate them along the way to understand, okay, so this is your income, this is your expense, right? So we also bring the concept of living expense, because mind you, Amir, at the moment, living expense is big with the banks and with credit for analysis and for assessment. So if any client would like to build a portfolio, they need to understand the debt to income ratio. This is where we bring in the ratios as well. So
Mm,
we need to understand, what's my income, what's my living expense, what are the debts that I have, right? And can I service this loan? Or how can I service, X amount? Do I take principal and interest, or do I pay only interest? So it's quite complex. It's not as
absolutely.
easy as it sounds, but we work with clients so that we can help them navigate the process.
Absolutely. So they might face different challenges. They cannot service a loan if they want to expand the portfolio. They might realize that the previous purchases don't let them to grow their portfolio because
Yes,
maybe the high LVR or their income to debt ratio is just not
correct.
there. And working with someone like yourself as their finance strategist can help them to think ahead without
Correct.
being in that position that they can't do anything, and the only option is probably selling something or increasing their income.
Correct. Because sometimes, for example, probably you'll come across this quite a lot, Amir, as well, because you are in the property sphere. There are people who come to you, maybe they're a young couple, right? And when they're a young
Sure.
couple and when they want to buy the first home, they want to buy maybe probably the
A
new
dream
home, the
house.
new dream house, and maybe 1,000 downlights, in the
Yeah,
lounge, or 4 attached bathroom, and so forth. So these are
correct.
elements which the bank will not consider, because this is really over capitalizing on a property.
Sure.
So that's why the short-term goal and the long-term goal, sorry, is really important, because then you will ask them, okay, so if you invest all your saving and everything in one property, how will you work it out later on? How are you going to achieve your next property? So it's all about also the percentage, the saving. It's all about the mindset as well. And it's all about education, I would say.
Absolutely. So we see two common mistakes. One is purchasing something, then renovating it in a way that they overcapitalize, and they
Yes,
spend a lot of money in creating and improving their dream house. The
correct.
second one is purchasing something as their dream home first and then convert it into an investment property, which
Yeah.
is not necessarily ideal for that perspective. So it is very
Mhm.
important actually to think really ahead of time and maybe plan for the next 10 years, because if we decide to grow our portfolio, we can't purchase our first home without
Yes.
understanding all these requirements.
Yeah, and I like that you've touched base in regards to the growth of the property as well, because when you purchase a property, always remember valuation is key, because it depends how the lender will value the property. And mind you, with experience and expertise over the years, different banks value a property differently. It doesn't necessarily mean if lender A will value the property X amount, lender B will do the same. So it's really important which lender is going to support you as well. But at the same time, you've talked about the corridor, the growth corridor. When you purchase a property, you really need to ensure that they also have, you know, someone like yourself experienced who would guide them about, okay, this is a growth corridor, you know, or if you want to rent the property later on, what will be the rental yield? So I believe at the end of the day, it should all tie up so that the client feel that they are very well supported. So we really need to work in teams. So we don't,
Absolutely.
and we don't work, you know, just by ourselves. So we always like to, you know, to involve and engage other expert in you know, in the same field as well.
Absolutely. Absolutely. So in your opinion, what sort of strategies can be implemented to minimize the effect of these challenges in expanding the portfolio?
Now, what I would say, how can they minimize the risk? Probably this is something that we can talk about. There's the challenges and then there are risks as well. Yeah. So the risk, like we've talked earlier on, if you overcapitalize, then when you know, when you go to your lender may not value the property as you were hoping it to be and what you were hoping to achieve. So in this regard, I would say it's really important to really have good education and understand how lenders operate and understand lenders' products, you know. And also it's really, really important for you to understand budgeting and to understand also to know what are your living expense, you know. Sometimes people tend to ignore living expense, but if you don't monitor and manage your finance, then it will be very hard for you to monitor and manage your debts.
In terms of a strategy, we can also include things like, for instance, if we have $1 million borrowing capacity, we can purchase a one property, which is $1 million. We can purchase two properties,
Yes.
which they are $500,000.
Correct.
With different levels of rental yield.
Yeah, I totally agree with you. Now, the other thing, I'm very happy you've touched base on rental yield and you know, on rent. Now, when we do our servicing and when we assess clients' needs and so forth. Now, it's also important to note that some lenders take a percentage of the rental yield, but some lenders may take a higher percentage and some lenders take a lower percentage. So then when we do servicing, it makes a difference. That is also something important to note. One is valuation and one is also rental. How do different lenders look at rental, and also which postcode is the property into, you know? Postcode category is very important, category 1, 2, or 3, and how the density is important. So there's so many elements to it. So we work, as you can see, we're very detailed, we're very thorough. And,
Absolutely.
And yeah, so these are key points to remember.
I was going to ask you the significance of using an experienced mortgage broker when building a portfolio, and you touched base on some of the key points already. Because many
Yes.
people, when they try to get a loan, the only thing that they look at is the interest rate. And they said, oh, that bank has the lowest interest rate, but they don't understand that they don't satisfy many other needs that they must meet actually. And you as an experienced mortgage broker can guide them in that process and tell them, look, interest rate is only one factor. It basically prevents you from achieving your goal, which is creating a property portfolio.
That's not the only thing, you know. So
absolutely,
like you said, yeah. So being in the probably in the industry for a long time, so we understand different lenders also have different assessment and different basis point that they use, you know. So some of them will use a different benchmark for assessment.
Cool.
Some will use a different benchmark for rental. So and it also depends on the person. Are you part-time? Are you permanent? Are you full-time? Are you casual? How will your income be assessed? That's also there that we have to consider. So yeah, it's quite complex, but I think with experience and expertise, we cover all the areas so that we can guide our client. That's the main thing.
Perfect. So if the audience could take away only one thing from this podcast, what would you advise them to focus on?
Okay, what I would advise them to focus on would be manage your debts and your liabilities, and also don't compare yourself with your neighbors or what other people are doing. You know, if people are buying 10 properties, well, it doesn't necessarily mean you should be buying 10 properties, you know. The main thing is to focus on you and your budget and your living expense. And if you want to reach somewhere, there's always a way of doing it in the right way. There's always a process involved.
Absolutely. Thank you very much, Vee, for being here today. I really appreciate you sharing your knowledge and experience with us.
Thank you. Thank you for having me, Amir. You take care and have a beautiful day. Thank you, everyone.
Thank you very much. So if you've liked what you've heard today, please like our channel and leave us a comment. And on that note, this episode is a wrap. We'll see you guys again very soon. Bye for now.
Bye for now. Bye.